Okay, so the Fed just warned that AI bubble conditions are accelerating, and simultaneously, every influencer with a platform is still telling people to buy chip stocks. Let me show you why that's not actually a contradiction. It's the whole game. Meet Kevin flagged it. All In Podcast flagged it. InvestAnswers flagged it. The consensus is sharp. AI hardware Capex is real, but valuations are stretched, and something is starting to crack. A $20 billion fund just got margin called on chip positions. Nvidia is up 2.27% today, sitting at 223.96. The stock keeps climbing, the warnings keep stacking, and somehow both things are true at the same time, which tells you everything you need to know about what's actually happening here. Here's the thing that doesn't get said clearly. There's a difference between the AI infrastructure build-out is real and AI chip stocks at these valuations are a good buy. One is a fact, the other is a casino bet. And the influencers know the difference. They're just banking on you not catching it. Nvidia manufactures chips. Those chips are actually being deployed. The Capex is actually flowing. That part is real. But the stock price, the thing you're actually buying when you buy Nvidia, has already priced in not just the build-out that's happening, it's priced in a future where that build-out never stops, where margins never compress, where no competitor ever gains real market share. That's the bet, not the fact, the bet. Nvidia trades at roughly 36 times forward earnings. The S&P 500 sits at 20 times. So you're paying 80% more for growth that's, and I'm being generous here, already mostly visible and being reflected in competitor stock prices too. AMD, ASML, even older school names like Broadcom, they're all up double digits this year. The entire chip complex got bid up because the whole sector thinks the Capex parade is infinite. But here's where the Fed warning actually lands. It's not about whether chips are being bought, it's about whether they're being bought at a rate that makes sense relative to actual data center utilization and revenue generation. And early signals suggest that answer is no. Deployment is slowing. ROI timelines are stretching. Cloud providers are asking themselves hard questions about whether a $300 billion AI Capex commitment actually pays back the way they modeled it a year ago. Spoiler, they're not sure anymore. This is what Meet Kevin and the All In guys were circling around without saying it directly. The Fed isn't warning about AI itself, it's warning about the financing structures propping up the buying. Margin is flowing into chip stocks because the narrative is still intact. But narratives are fragile. The second the actual cash flows don't match the hype, the margin reverses. And when margin reverses on concentrated positions, things move fast. So why are influencers still telling people to buy? Because selling the dream is easier than selling the reality. The reality is, Nvidia is probably fine long term, but at these prices you're paying for perfection. And perfection gets repriced fast when something cracks. That's not a headline. That doesn't get clicks. But AI bubble is forming, and here's why Nvidia still goes higher. That gets engagement. You get the warning and the bull case wrapped in the same package. Retail takes both home, processes neither one correctly, and ends up holding a leveraged bet that looks like an investment. Here's the honest version. If you believe the AI Capex cycle sustains and margins stay fat, Nvidia is fine. But you're not actually being told the second part, the part where that happens or it doesn't. You're being told both. And when you're told both, you're being sold something. The Fed knows that. The smart money knows that, and now you know that too. What are you actually doing right now? Are you hedged for a slowdown in Capex growth, or are you fully levered on the idea that it sustains? Drop a comment. And if this kind of second-order thinking on hype cycles is useful, hit subscribe. More of this coming. And speaking of margin calls and leverage disasters, a raccoon named Mayonnaise got trapped inside a literal mayonnaise jar in Dallas last week and had to be rescued by animal control. A full-grown raccoon inside a mayonnaise jar. Humans really are the most creative creatures alive. We just choose to be creative about the dumbest things. Okay, that's a wrap. Subscribe for the daily market brain dump. Have a good one.